Thursday, August 11th, 2022, Monaco 64, home of alternative economics and contrarian views. There's some interesting headlines that have come out. Of course, there was CPI yesterday. It came out a little lower than expected. And yes, there's also some news about the case against the JP Morgan precious metals traders. And that's what I want to talk about on the main today is the price manipulation of precious metals and what I think is the solution to it and how they do it as well. So yes, CPI was expected to drop a little bit. It dropped a little more than was expected, but it came out still at 8.5%, which is the same rate that I think we had in March, and people were worried about inflation. But the way the markets reacted initially was as if the Fed was done hiking rates, or maybe they're going to lower the amount of tightening they're going to do in September. And I think the market has. They now expect a half a percent hike. We even had the so-called president of the United States, Joe Biden, come out and say that inflation was zero, which is quite funny, even though it was going up 8.5%. I saw that the component for owner's equivalent rent only went up about 5% or so, even though I've spoken about this about a week ago, that rents nationally in the States, according to private companies that track this, is going up more like 14%. So yeah, these numbers don't mean much. And just because the rate of increase in prices slowed down doesn't mean that the inflation is finished. We had a lot of these fluctuations in the 70s, and eventually the paper dollar almost collapsed, and they had to raise rates, allow rates to go to over 20%, and that's the only way they'll be able to save the fiat currencies. The dollar, of course, is the top fiat currency, and it's still outperforming all the other currencies, even though yesterday we saw, right after the number, that the dollar collapsed or crashed a little bit against everything, even gold and silver. Of course, gold and silver were knocked down at the end of the day, as they usually are. And it is frustrating, but I'm going to try to tell you what it's all about and what it means to have physical gold and silver. And hopefully that will help you mentally. And believe me, I've been doing this for 20 years, and it's always very frustrating. But in the long run, you will actually regret that you didn't exchange as much of this crappy, worthless paper for real money. If I knew what was going to happen in 20 years' time, in 2002, I would have done maybe a Michael Saylor. Not really, but I would have exchanged a lot more of my fiat savings for the real thing. So there's a headline overnight here, and I'm taking this from Gold Telegraph on Twitter, and it says the former head of the JP Morgan precious metals business and his top trader were convicted on charges they manipulated markets for years. So this is in relation to spoofing, which we've talked about. And if you want to know more about gold manipulation, the price, and silver, you should go to one of my playlists, which is just about that, the gold manipulation playlist on my YouTube channel. But what I'm trying to say here, yeah, spoofing is only one of the elements of controlling the paper price of gold. I would say the most important element of controlling the paper price is the fact that in the city of London and maybe in New York to an extent, but not as much, the financial institutions that deal in gold for their clients, for institutional clients, for private clients, they can basically borrow or lease the gold from the Bank of England, from the LBMA, from the bullion banks in the LBMA, and the bullion banks lease it from the Bank of England. Bank of England keeps up about 5,000 tons of other people's gold. The UK gold reserve is only 300 tons. So what they do is they lease it, they rehypothecate, which means they'll lease an ounce of gold many times over, and there's no limit in London. And that's how they keep the demand for physical low. And that's what I'm here to say. Unless people really buy the real thing and stop wanting to make paper profits in currencies, and this is a £5 note, and it applies to a $5 bill or $20 bill, until people realize that these things are becoming worth less and less. They will realize that it's not worth trading for these things. But unfortunately, it's not just the bullion banks and the central banks that manipulate the paper price. It's the general public, the big hedge funds, the investment funds, who instead of buying the real thing, which is this really, they bet on the paper price of this to make more of this paper that becomes worth less and less. And you might say, well, in the last 2 years, gold hasn't gone up in price. Well, it hasn't maybe in US dollars, but it has in pounds. And you need to be more aware of the long-term repercussions of inflation. So I did a little experiment here. Not an experiment, but calculation, right? Because prior to the outbreak of World War I in 1914, you could take one of these. Of course, they were different back then, a £5 note. And you can see that they still have that promise here. And I'll read it to you. It says, I promise to pay the bearer on demand the sum of £5. So what did that really mean? Well, I spoke about how Nathan Meyer Rothschild tricked the Bank of England back in the 1800s by taking his banknotes and demanding that they pay in money. And so prior to the outbreak of World War I, when they suspended the convertibility of currency into real money, and that's what it is. And it's been, there was a period maybe in the mid-20s to 1931 where you could do it again, but it was discouraged. But ever since 1914, for all intents and purposes, the contract for money has been null and void. So back then, prior to the outbreak of World War I, you could get 5 of these for a £5 note, because it meant that you could, this was legally a pound, a sovereign, which is just under a quarter of an ounce. And it's still in the books that it's £1 legally, and it's legal tender. But nowadays, I've done the calculation. So today, if you look up online to buy one of these, it costs £368 of Bank of England notes. So with one Bank of England note, you only get 0.013 of this. And back in 1914, with one Bank of England note, you used to get 1 of this. So it's gone down massively in value, multiple times. And I calculated as well to 2002. And why 2002? Well, because earlier in this video I said I wish I'd exchange more of my fiat savings for real money. Well, back then, with one of these, I could get a tenth of these, which you can actually see, visually you can picture a tenth of this coin. So, and now I can only get 0.013 of this coin. So that's the way you have to think. And the other thing I would say, it's consent. If you keep playing their paper game, if you keep trading the futures, if you keep buying from the banks, because a lot of banks say, oh, you don't have to take delivery, we'll buy it from you, and we will hold it for you, and we'll charge you a storage fee. Well, Morgan Stanley did that with silver some years ago, and they had no silver. Yes, and also buying ETFs, GLD, SLV. It's the wrong way to go, unless you want to keep making profits in these pieces of paper that are becoming worth less and less. You can do the same experiment that I did for this with the dollar bills, and you'll see what I mean. And dollar bills as well used to be a promise. You had the gold certificates, of course, but they've been very good at convincing people that this is money, and that's the whole problem. Spoofing, yes, it does help them, but it's not the biggest part of the manipulation. The manipulation is more psychological. It's more pushing people to buy paper. And what paper basically is a promise to give you gold and silver, and it's not real. And it's the same thing for politics, I would say, even though what's happening, what has happened in the last few days vis-a-vis the former president is concerning. I would say if we keep choosing these people to run our lives, they're going to keep tricking us as well. And it's the same thing with money. So my philosophy is to be as independent as possible from their phony money system, in which the contract for money is null and void, and to also be independent and not participate in the political system, because there are no public servants anymore in politics. They all care about democracy, and the fact that 50.1% of the people can oppress the other 49.9, and that's what it's all about. So with that, let's quickly look at where the markets are this morning. It's 8:23 a.m. London time. We've got spot gold at $17.87. That's down about $5. The high has been $17.94 and the low $17.83. Yes, we broke through 1800 yesterday. It got up to around 1808. Spot silver is at 20.55. It's down about 3 cents. High's been 64 and the low 42. The Dow futures is up 118, or 1/3%. The NASDAQ future is up 0.5%, and the S&P is up 1/3%. FTSE future is up 20 points. Eurostoxx 50 is up 18. To the currencies, sterling is unchanged, 122.27. The euro is up 0.2 at 103.20. The dollar is down 0.25% versus the yen at 132.56. The dollar is down 0.2 versus the Swiss franc at 94.05. And the dollar is up 0.2 versus the yuan at 673.58. The dollar is up slightly versus the ruble. It's trading at 61. To the other currencies, Aussie dollar is up 1/4, just below 71. The dollar is down slightly versus the Canadian dollar, 127.66. And the Kiwi dollar is up 1/3 at 64.20. To the general commodities, WTI crude, that's back above 90. We were trading 89 handle yesterday. We're down slightly, but at 91.26. Brent crude is down a quarter of a percent at 96.70. High grade copper is up over 1%, back to around 370. And U.S. nat gas is up 2/3% at 826. The European or the Dutch TTF nat gas futures is continuing to move higher. We are at 212. It's up another 3.3%. So what do I think of this movement in the UK about not paying your gas and electricity bills or utility bills? Well, I think it's a silly movement because all it will do is get you into trouble, because you're going to have your debt, your credit rating, if you care about that, compromised, and you probably be cut off from your energy and your gas and electricity. The problem is not really gas and electricity prices. The problem, as you saw earlier, is that this piece of paper is becoming worth less and less versus real money. And why do I say real money? Well, because it has been real money for thousands of years. And it's not Bitcoin, as some people say, that will change this. What will change this is honesty, having honest contracts, honest weights and measures. Money, just like any other commodity, you measure it in its weight, right? And unfortunately, since 1914, we haven't had an honest contract for money, and that's what it's all about. And for silver as well, they've taken the silver out of the coinage, and they make the coins look like silver, right? With copper, nickel, and now they use steel and aluminium. So it's getting further away from reality, and the contract for money has been completely broken. So that's what it's all about. And something that you can't even touch, that people have no idea what it is, that can solve the problem. I think it's pretty naive to think that. So before I finish, a quick look at the Treasury market. The 10-year yield is unchanged at 277, and the 2-year is at 319. So the basis point inversion right now is around 42, which is still quite a big inversion. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Subscribe to the channel if you like my videos and haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.